Good morning, everyone. Happy Wednesday. It's about 5:50 a.m., March 18th, and prices of Bitcoin currently at 51.22. We've had a nice drop off overnight, and I want to show you guys exactly how we were positioned since yesterday. Okay, so first thing I want to show you is we were actually in a scalp long. Okay, and I wanted to show you guys here exactly where we got in and where we got out. And the reason we took a scalp over here is because, as you guys have very well known, for the last few days, I've been saying that long opportunities in this market are going to be far and few. And if they are there, they're going to be very tight and hard to maintain. Okay, so this is why I go with even smaller capital, even smaller size, and then aim for more conservative targets in my long. Okay, so for the most part, what we are seeing is in this particular chart. Okay, I'll show you guys. We are looking at this little pennant right here. Okay, and though it did break up to the upside, it did not reach our targets that we were looking at, which was 5,600 right here. That was the first one, and then 58.75 was the second one. Okay, so it reached up, but then it came back down, collapsed under the key levels of $5,500, and then I think around maybe this area right here, this is where it took out my stop. And as you can very well see, again, we got in around 53.76 or so, and then I got out right around 53.88. So really no harm in that long, you know. But the thing is, I want to show you guys our thought process of slowly moving up our stops and also being able to pivot ourselves into the other direction of the position, which is going short. Okay. So first, I want to show you guys exactly why this trade went wrong. All right, number one, after you see a thorough breakout like this, you don't want price to go like this and then get rejected back sharply, like that, right? After retesting the trend line, it should just keep going up and up. Okay, if this is truly a bullish retest, what it should be doing is going up, bouncing off the trend line, and then putting in a higher high as per this wick high. Okay, so we didn't see that, right? So my stop was actually way down here. So I entered the trade right there. My stop was way down here, and I had no reason to move my stop up until I saw this thing going like this, and then it started meandering around this particular area. And I was like, okay, there's something clearly wrong here, right? So what I did was I set my stop just under the base that was being created right here. Now, if you look very closely, okay, you have to go in essentially on the 5-minute time frame. And again, I'm not trading off the time frame. I'm seeing that where is a base being created. And if you look on the 5-minute time frame, it's kind of like this, right? These kinds of higher lows right here. See that low right there of a bullish retest on the trend line, then a higher low, then another higher low. Okay, so all I did was I said, okay, well, it looks like we're creating somewhat of a base in this area right here. Okay, so if I just set my stop right there around 85, okay, if price breaks down under, chances are it's going to go down much further. Okay, which is exactly what it did actually, right? Because you don't build a base like this only to break it and then go back up. There are times where there could be some liquidity hunting, but more often than not, it's not like a 5-minute base. It's usually like a multi-hour long base where you might see a quick hunt to the downside and then a V-shaped recovery, right? It's never like, okay, well, I'm going to do this and then come back around, retest that same area as resistance, and then, keep just hovering and hovering, right? So anyway, point is I set my stop right there. I got out in a very, pretty much a minuscule profit, because you could see my exit was 53.88. But then what happened was something really interesting, which was I started looking at this particular movement that looked like an ascending triangle, right? And I said, okay, well, I mean, the move looks pretty healthy, okay? But here's the thing, all right? When you have an ascending triangle, which is, touch at the bottom, the top, the bottom, the top, you kind of want to just have a little bit of a pullback and then push on through. There isn't this kind of dilly-dallying right around this particular high of the trend line. You're not supposed to do that, okay? You typically just have, you know, maybe a couple of pokes up here and then just get out. Okay, you don't have this kind of wick and this kind of wick and these kinds of wicks just poking out and then being rejected back under. This tells me that there was probably sellers defending their positions or shorters loading up on shorts. Okay, so sometimes what happens, folks, is price is, you know, essentially engineered to be pushed up into the direction of where other people are looking to get their positions filled, which is the shorts right here. So even though you may think that price is creating a bullish pattern, right, you have to understand price in the context of things. And also when you start looking at things like EXO, the way we look at EXO charts, right, you start realizing there's a couple of, you know, key footprint statistical data that points out that, you know, maybe in this particular case, this may not have been a, you know, a readying push to the upside. It may have been, you know, an artificial push towards an area where price just cannot get through and then shorts are being loaded. Now, it's very hard to figure out, you know, what is happening. But once price action starts breaking down, then you start realizing, okay, now we know that this push was, for the most part, unable to break through this area. And now we can at least assume with a higher degree of confidence that we're going to potentially break down because sellers were defending here and shorters were loading here. Okay, so what we did was, after we got out of that long, all right, we positioned ourselves short. Okay, so here's our short position. All right, this was, where was it? Okay, so yesterday, obviously, we took a loss on one of our shorts, but again, we try to maintain our short positions, or any position for that matter, to have, you know, minimal losses. But here's our current position right now. Okay, so I got in around I think 53.68 or something like that, and so that was up here. Okay, and some of my members actually got in around 5400, 5420. Okay, so the reason why we got into that short is because, remember I said the top of this triangle neckline right here, okay, this is the key pivot point, okay, and it is generated by this wick high. Now I know it's probably hard for you to understand why this wick high, but for the most part, just bear with me and understand that this is the more important wick high. Okay, in that wick high, notice that we barely have any candles that close successfully over this area, all right, which is this wick high right here, without the following candle being thrust back down under the wick high, right? And by the way, this is on a 30-minute time frame. If you look on the 1 hour, okay, there's definitely no candles that closed above this wick high. All right, let me see if we can change that. And if they did, again, they got quickly rejected. Okay, let me see if I can show you guys that trend line. So here's that 1 hour. Okay, notice again, 1 hour closes above, following 1 hour is a bearish candle, following 1 hour bearish candle, boom, pops back under. And that's this trend line again, right? Even over here, 1 hour tries to close above, quickly rejected. Even over here, 1 hour tries to poke above, even this 1 hour tries to poke above, quickly rejected. Same with this one. So the point is that there are certain characteristics of price that over the years you just start to recognize, okay, that, you know, these are the key levels that, you know, people are waiting, or bears are waiting. You know, they're defending their positions. Okay, and once you start to realize that, and once you start seeing price close back under this area, this is where I started to get short right here, and I pretty much just left the position on overnight, put my stop up here, and rode this thing down. So now we've captured about, you know, a $300 move so far, right? And I'm actually not done yet. Okay, so I'm not even going to take profit here, because I believe that my next target profit marker is actually over here around $4,800 to $4,850. And I'll show you guys exactly why. Okay, if you notice here on 13th March, okay, when we had this big V-style reversal, we popped up to this area, used it as support, and then popped back up, right? And then what we did was we went all the way up to $5,800, $5,900, and then smashed on through this area, or rather, first we tested that same area of support, smashed through it, broke up through it, and then tested that area of support. So this, to me right here, this particular area, this this is all a pivot area for price, okay? And I can guarantee you, well, not guarantee, but I can say with a high level of confidence that, chances are that we're at least going to find some support here, okay? So this is why I would like to take profit on my short here. And that would effectively mean I've captured about almost $600 of the entire short move. Okay, but so far we've been doing a really great job in this volatility, in this volatile environment, of being able to capture multi $100 moves and sometimes even $1,000, $1,200 moves. Okay, but remember we keep our stops wide. All right, and we also size down. Okay, you have to size down in this environment, folks. The rules of the game have changed. Okay, you have to accept the fact that the market is much more volatile. The swings are much more volatile. Okay, so you have to adapt, right? You either adapt or you piss away your capital. Okay, and if you piss away your capital, you're not going to have enough money for the next potential bull run that we might have in Bitcoin. Okay, so you want to be careful in these markets, right? So at least in the advantage side, I let my community members know exactly what I'm thinking about doing. And you can see I had targets set up for my short position at 5,050, 4,800, and 4,300. 5,050 definitely hit because you could see we went to a low of about 5,022. Okay, so we took some profit there. And my next target profit area is going to be this $4,800 area. Okay, so that's kind of my thought process. Okay, I really don't see longs to be particularly effective right now. I would probably say there's a little bit more downside left. And if you start looking at the U.S. stock futures, again, they're down massively, folks. It's gonna be a really rocky ride, probably for the day ahead as well. And if you start looking at global markets as well, kind of took a beating, right, across the board, -5%. The Asian markets took about 4.24, -1, -1.6. So across the board, I mean, the blood is coming in again, right? And it's titles like this that you need to keep an eye on. Okay, it's basically that stocks fall again as stimulus firepower fails to impress Wall Street. Okay, it's very true because the S&P 500, we've been getting news about zero interest rates, $1.5 trillion injections, $500 billion repo overnight injections, and yet the market still keeps going down. So what does that tell you? That means the market has already priced in stuff like that. Okay, it's basically telling you that, hey man, you're gonna need a lot more than this, to fill the hole in the boat that you have. That's how you have to read the market. Okay, and so if the market is already saying that, even after the stimulus, right, even after the zero interest rates, it's just saying, so what? Like we need more. This is not going to help fill in the hole in the stock market. Okay, and I've said this over and over again. We are actually facing a liquidity crisis wherein investors across the board are looking to liquidate their assets into cash, which again is king. Cash is king, especially in tough times like this. Why? Because people would much rather feel safer to be able to pay their bills, to be able to take care of their family members. And it's just human nature to feel safer when you have cash. You don't feel safe when your money is tied up in investments, right? Whether it's gold or commodities or equities, it's just not a risk that most people are willing to take right now. So majority of people would rather stay in cash. And I would say, investors across the board too, even institutions. Okay, so if they're staying in cash, right, and the Fed is essentially pumping in as much money as they can with 0% interest rates, and the market's not moving, right, there's really not a whole lot of people who are buying, other than maybe a few funds here and there. We're also probably taking it almost a high risk approach. So the only real person that's buying is the government. Okay, and the government is not able to sort of find a floor for this market. It's a little scary, folks. It's a little scary, and I think that kind of impacts BTC the same way, right? As I've said before, Bitcoin has been acting like a very high risk speculative asset. Okay, the whole argument about safe haven at least at present moment, is out the window. The only thing that Bitcoin needs to do right now is not fall another 30, 40%. And I don't even know if Bitcoin can promise that, because it's got weak legs. Okay. There's going to be a lot of people, if the markets look shaky again, they're going to start selling high risk assets like Bitcoin. And these are the levels that then you start watching, 4,800. And then this low right here around 4,400 to this low right here around $4,300. Those would be the key lows that you need to start watching. Okay. As per a daily perspective, as I've said before, if you just turn on this pivot indicator, all right, let me turn off the historical ones. If you just turn on the pivots indicator, right, the big S5, okay, is all the way down here around $2,900, folks, $2,900, okay? So it's very possible that we reach that low, all right? Things are going to get really rocky if Bitcoin does not, even hold itself up, okay? And I've said that after 2,900, if you start going on the weekly, my next target is about $2,400 based on this S1 right here, okay? Yeah, 2385 or so. All right. And then after that, my final target for Bitcoin will be way down, around $1,300, $1,400. Okay. And that would be because of this right here. Okay. So if you look at this thing right here, this was the previous high of the bull cycle in 2013. So that means that in this particular area, we could come down and test that as support, and the long-term hodlers would probably do their best to defend their position, okay? Which is either not sell or double down, right? And I would say, a lot of people, if price does come back down to this area, they'd probably buy, okay? So that's around, $1,200 or, $1,150 or so, okay? All the way down there. Again, I know that's kind of far, but in the context of things, it's really not that far. The way things are looking right now in the markets, we may have a further breakdown to go. And if the S&P 500, let's just say, breaks down by another 10-20%, I've said before that Bitcoin will break down by 2 to 2.25 multiple of that. Okay, that's what it's done so far, right? If you look, okay, Bitcoin from the February high right there is down, or was down, all the way to about 66% or so, okay? And while the S&P 500 was down about almost to its low around 30%, okay? So almost, a multiple of 2, right? So let's just say the S&P 500 breaks down another, let me see where the other key support levels are for the S&P 500, okay? Let's see. So this is, definitely a key support, because this was the 2018 base where we pushed off all the way up here. Well, if that doesn't hold, right, I'd probably say way down here, all right, way down here around this base, October 2014, September 2015, and February 2016, okay? So from here down, and again, this doesn't mean we have to go straight down. So from here down, that's about another 23% drop. So let's just say 23%, multiplied by 2 to 2.25 multiple, right? So we'd expect, right around 50 to 55%, another 50 to 55%, right? So from where we are right now, okay, that would say at least, let's just say right there, around, 55% or so. So around 2278, okay? So that brings us to that, weekly marker, definitely around the S1, right? That's a 2385 or something, okay? So you could see, there's a lot of cases to be made that if the S&P 500 keeps breaking down over the next several weeks or several months, Bitcoin is going to have a tough time to climb back up, okay? That's just, the only way to look at it, all right? So as you can see, markets as a whole are still not looking too healthy in terms of the open, okay? And we will provide you guys an update, exactly how we're going to position ourselves for the remaining, few days, few weeks. Again, if you're not part of the Advantage community, folks, come join. You see analysis like this every day, right? You see that sometimes I'll let you guys, know exactly what my position is. But by the time you know, it's too late, right? We've already captured almost a $300 move in the short. While you may have actually been told that, hey, this, is a potential long, and now you're stuck in a long that's either bleeding or you don't have a good opportunity. So knowing when to switch your bias, knowing when to switch your positioning is something that we do really well. Okay. And also being able to tell people how to manage risk in markets like this is something that we do really well. All right. So I hope you guys come join. Click the Discord link below in this YouTube description video. Hit the thumbs up and then go to our website, cryptosomniac.com. Go to the products page and sign up for Advantage membership. Okay. You'll get analysis like this. You'll see, positions like this that we take where you capture, multi-$100 moves. You'll see gains reviews like this for yourself. Okay. If you just read these gains reviews from all these people who've spent so much time with us, right? I think it's very evident that at the very least, we're helping people not commit mistakes, right? Now, I can't always guarantee you that, hey, you're always going to make money in this market. First of all, that's not my job. I'm only here to show you exactly what kind of positions I'm taking. I'm not here to tell you that you should do this or you should do that, okay? At the end of the day, you are responsible for how you pull the trigger in this market. But if you pull the trigger based on our analysis and our warnings to tell you that, hey, this is what I'm seeing in the markets, hey, then you've basically saved yourself a bunch of money and potentially made some money. Right? So these might be some of your gains reviews, say in the coming days or weeks if you come join us. Okay. That's pretty much it, folks. I hope you guys enjoy this content. I hope you hit the thumbs up, leave me a comment of your thoughts, what you think is going to happen to price over the next coming days or weeks, and I will catch up with y'all soon. All right, take care, cheers, and keep your stops tight.